everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. All right, welcome back to the program. My guest is joining us right now virtually. She's Dr. Oluwandepelumi Olanubi. She's the Executive Director, Kingsgate Advisors Institute. Hello. Is it okay to call you Dr. Pelumi?
Yes, it's okay. It's okay to call me that. Good morning.
Morning. How are you doing?
I'm very well, thank you. How are you too?
I'm very well, thank you too. Let's get to it. But can many Nigerians actually say they are doing well at this time?
Data is saying one thing, reality is saying something else. And it's just where we find ourselves. But I'm going to really break this down so that Nigerians can see where we are heading and how far we've forward. Generally, when we talk about macroeconomic stabilization, and when we talk about the policies that government have been taking, recent reforms towards the structural reforms that we've been seeing in recent times, is towards macroeconomic stabilization. And that sounds like a buzzword, right? What does it really even mean? What do we always talk about that? In a simple term, as the IMF defined it, I'll just describe it as when an economy has or experience what we call internal and external balances. And this can be defined by some indicators. First on the indicator is output. If output is growing at what we call very close to potential output rates, if inflation is low and well anchored, if interest rate is accommodative and is able to support the financial market, and if exchange rate is an external variable, even unemployment, if unemployment is it's at natural rate of unemployment rate, right? That's when we say an economy has internal balance. And for external balance, we have variables like capital accounts, we have trade balance, we have exchange rates, foreign reserves, and the likes of it. But let's look at where we are in Nigeria. Inflation is still at double digits, despite the rebasing that we saw earlier this year. Inflation is still at 23, 24%. In fact, some would argue that inflation rate is way more than that. Exchange rates, as interest rates as an internal variable is very high. It's not accommodative, rather is even stifling real sector growth. Exchange rate, on the other hand, we can say there is a sense of stability in the exchange rate compared to what we experienced far back as 2021, 2022. But however, exchange rate is still very high. The absolute value, exchange is at 1,600. If you compare that to when we were at 600 naira to the dollar, you say that it's still on the high band, so to say. Foreign reserve is still around that 33, 34 billion dollars, for a while now. So we see that we cannot say the economy is actually stabilized. We are not coming towards macroeconomic stabilization, but we have seen improvements in the indicators. And like you rightly said from your intro discourse, the word on the street is, how is this affecting my pocket? So we need to see macroeconomic stabilization also supported by economic growth. That is when we start seeing the impact on the grassroots. That's when we start seeing the impact on our pocket. When we see growth in sectors that are employment elastic, that are able to employ more people, the standard of living improves. They will begin to see the impact. So basically, what the data is saying and what the reality is, there's still a large disparity, and we are not even yet there when we're talking about stability.
So I wonder perhaps why macroeconomic, why these macroeconomic indicators are still being celebrated, especially by Aso Rock. And they are celebrated by Aso Rock and those that are living around Aso Rock, and being celebrated. Yet, the living conditions in the grassroots is telling us a different story. So I said it at the beginning of the program that, so that we're not caught in all of these technical jargons and all of that government is telling us, we also need to give feedback to the government that, for me sitting at this table, I understand what government is trying to do. but yet the impact, the ripple effect, you know, in sciences, they say to every action there's an equal and opposite reaction. So the reaction of the government's actions is deteriorating the lives of Nigerians. So from your own perspective now, we shouldn't take a look at it as stability, but improvement. But yet Nigerians are not feeling that improvement. Why do you think there's that disconnect?
All right, thank you for that. I'm going to take this from two angles. First off, if you look at where we are coming from, we would agree that we've made some progress in our journey. Let's take some of these indicators, for instance. When we still had this distortion in the foreign exchange market, when we had this high volatility that businesses, individuals, and even investors cannot even plan, you know, for what the macroeconomic environment is. The uncertainty was. We saw the progress as the liberation of the exchange market, and we've seen the success story in that, you know, in that regard. However, the trade-off also is that exchange rate is still very high. That's one. If you also look at the subsidy removal thing that was done, the reform that was done in 2023 by the current government, the before now, subsidy itself had actually died a natural death because government could not even sustain it. They were literally borrowing to actually paying for subsidy. Although I don't want to go into some other political discourse around subsidy, but let's just take it as though the government was subsidizing and they had to take that up because it's weighing in on the government's balance sheet. So if you look at that progress also, we see that, okay, that actually had impact. And for every macroeconomic stability program, I believe the government must have done their impact analysis to see the trade-offs, And that is why we've been saying this for both monetary and fiscal policy makers. We want to see some more coordination in that regard. We've been seeing for the monetary side of things how the central bank, the monetary policy committee have continued to raise interest rates to rein in the impact of inflation. And why do we see this inflation stubbornly high? The reasons are not perfect. We are a largely import-dependent country. And because of that, most of our raw materials inputs are imported. This would be factored into the cost of production. Also, within the system, the subsidy removal, the impact on energy, that also is factored in, is also inflating prices. And when we see that inflation, when we see that prices increase, the central bank will do what it knows to do best, which is to raise the interest rates. And when we see that, that affects the production side, the real sector, because credit to expand, to employ more people, to increase production becomes more expensive and almost inaccessible. And when that happens again, that also fits into the production cost, which further increases the inflation rate and all. So that's why we are seeing this vicious cycle. And that's why we are seeing that we're not seeing this impact as true.
Okay.
Like people would argue, inflation number is a number, reality is reality.
Yeah.
Some would even argue that.
Yes,
okay.
yes, go ahead. Because
okay.
you were saying that inflation is not just inflation is not just a statistic,
okay.
Isn't it? Just hold on a bit. Is inflation just a statistic, or is inflation is really on the faces of people? Inflation is really in the pockets, you know, of Nigerians. And just before you land, I wanted you to add this. I wanted to ask this question around what you're saying now. Which macroeconomic indicator impacts Nigerians the most now? Would you say is that of inflation? Would you say is that of exchange rate that also has a pass-through effect even into inflation figure? Would you say is that of even interest rates that impacts businesses? I was speaking with someone just a few days ago, and they were telling me that getting loans right now in Nigeria to do businesses for interest rates, some people get as far as high as 40%, even more than 40%, where the MPR in the country is about 27.75, if I'm not mistaken. We're expecting an MPC meeting this month, later this month. Katuso and his team should be able to recalibrate and tell us what the MPR should be. So what macroeconomic indicator really impacts us the most?
All right, thank you for that. So the first question that you asked, inflation in the real sense, we have the figures, we quote it, but the real impact is on the pocket. A man earning 100,000 3 years ago, still earning 100,000 today, is he able to live the same way he lived 3 years ago? A family of 3 that was able to survive on 100,000 Are they able to do the same today? So that is real what inflation is. For consumers and people on the street there, they don't really care if they tell us reports that inflation is, so to speak, 10%. What they want to see is that the price of gari has reduced, the price of rice has reduced. And as to the macroeconomic indicator that is actually affecting us the most, I would say it's actually a complex thing. It's not one indicator because of the relationship between these macroeconomic variables, because of the way the economics is intertwined and the way the relationship or the pass-through effect from one variable to the other. And to contextualize that, let's look at exchange rate and inflation. You know, like I rightly said, we are import dependent. Whatever we buy from international market using the exchange rate will be passed on to cost of production, will be passed on to the price of goods and services. This also would affect the price level. And when price level continues to increase, MPC or MPC would probably want to rein in this inflation and raise interest rates. And when they do so, you will see this impact on credit. You'll see that it becomes more difficult. Like you said, borrowing is becoming more expensive, and sadly so, it's becoming inaccessible. People cannot, businesses, small and medium scale enterprise cannot access this. So we're saying that we are seeing all these exchange rate dynamics, these macros dynamics, and we are saying that the impact on the household and even businesses is still very there. The negative impact is still there. We are not seeing the way. The only good thing we can say right now is optimism. Unlike what we had a year ago, where there's a lot of pessimism around, people are just pessimistic. They're not even sure where we're heading. There's a sense of optimism. I think people are hoping things will get better, looking at how the impact of the policies and the reforms so far. So there's optimism around here. So that is also affecting inflation expectation. Let me just give a simple example, analogy of that. A market seller will not necessarily price in uncertainty in his goods and services anymore, because there's still this air of, okay, things are getting better. So the prices that they put, the premium they put on goods and services, like a year before, the premium is no more there, because of course there's this sense of certainty that things are getting better, exchange rate is getting stable, although still high. Price level, hopefully, if the reform continues to have its full impact, would also First, on the monetary side of things, I feel like the central bank needs to also look into some of their tools and see how they can actually maximize the policy trade-offs and the impact on the economy. We need to stimulate growth. We need to stimulate economic activities. We need to see more investments in critical sectors. We need to see that, even as we're trying to rein in inflation, because it's a vicious cycle, and something has to break. And also from the fiscal side of things, we need to see more action. All right, I'm listening.
Okay, yes. I like what you said, that we need to stimulate growth. And before you said that, you talked about the Central Bank of Nigeria. But the posture of the Central Bank of Nigeria right now is that of the orthodox posture. In terms of Cardoso is really hell-bent on price stability. In terms of getting inflation, let's get back to what we are supposed to do. Whose responsibility is that to stimulate growth? Whose responsibility is that to bring down this stubbornly high inflation? I know at the thick of all of this, President Tinubu announced a food crisis kind of committee. I think that was in July of 2023, if I'm not mistaken, in terms of, okay, let them aggressively produce food and all of that. I don't know if we've seen the result of that, or if the result of that is the, reduction of food prices that we saw, that we've seen in the last couple of months. But that could also be attributed to some seasonal foods. So whose responsibility is that to stimulate growth? And do you think that the fiscal policy makers, the fiscal authorities, are doing enough? And let me also bring in governors here and, dump some responsibilities on their tables, because it seems that President Tinubu is taking the bulk of all of this. Agreed, the buck stops at the leaders' table. And your posture will also send a signal to other 36 state governors, including the FCT, on what to do. So go ahead.
All right, thank you. So I'm going to start from the monetary sector. Like rightly said, the monetary sector have communicated clearly, and they've communicated clearly that they are going through what we call the monetary policy orthodoxy, where they try to rein in inflation through monetary policy tools, and basically they are using the monetary policy rate. And that's why we are seeing the continuous increase and the continuous hawkish stance that they've been taking for a couple of months now. While I agree that that has done some impact in reining in inflation, in fact, that has also helped in attracting possible investment into the economy. I would argue, and I believe some would also argue that if the size of portfolio investment inflow that we have seen is not even as we expected, given the quantum of interest rate that we have seen, in a couple of months. But it's a side of the coin. We have to have this complementarity, and we have to see this coordination between the fiscal side of things and the monetary side of things. That is where we can see where we can maximize or we have optimal policy outcome. That is when we can now begin to see the impact of all these policies and reforms trickle down to the pockets of individuals. And from the fiscal side of things, I won't say they have not done anything at all, but of course, they have not done enough, especially for the subnationals. Right, there's a lot of policy roles that you've seen. We even see from tax reforms, we've seen that strengthening some of the MDAs, we've seen that, we've even seen some efforts towards subsidy in terms of social safety nets and the likes. We've seen all that. But there are some things that are still lacking. First of all, I'm going to talk from the place of communication. Government needs to do more in terms of communicating with its people. Government needs to do more in terms of engaging with its people. Not just even as subnational governors and the likes.
Sorry, Pelumi, they will tell you that, okay, they are trying to communicate now. Do you think that the way they are communicating is good and engendering public trust? Because it's one thing to communicate, it's the other thing that the person you are communicating to understands what you're saying and even believes in what you're saying, where public trust has been eroded. That's one. Then number two, with these macroeconomic statistics that we're rolling out and government is telling us, even from the Nigerian Bureau of Statistics, what do you think explains that perception data divergence? You were mentioning earlier in your remarks, you mentioned in passing that even though you believe that inflation could be more than what is being said now. My guest yesterday, when I said inflation was at 24% in March, he said even though he believes that it could be close to 30%. So that means that there's a perception data divergence, even from those of you that are experts. So how can that credibility be there and trust by the public in what government is saying? Government is saying one thing, and perhaps even its posture is doing another. Do as I say, don't do as I do. Is that it? Yeah.
Yeah. So, I like how you concluded the question, right? So, and I'm going to start from there. Communication in itself could be verbal, could be non-verbal. People are reading the body language of the government. If you are not staying...
Oh, network shouldn't just play a fast one on us. Dr. Pelumi, are you still there? Okay. The network is also something I need to talk about. Let me just use this few seconds to rant, because since yesterday, the network has really been so bad. I don't know about you, but for me throughout yesterday, and I also know about some people that complained yesterday that network has really been bad. We are paying higher tariffs. Now, this is part of what we are saying. Economic pain is getting more deeper, yet we are not getting services for what we are supposed to pay for. So this is my own little few seconds rant. Network has not been working. The MTNs, the Etisalats, the Airtels, and co. Network has not been working well, and it's been hampering other business activities, because if you also want to do transactions online, it hampers that. So this is my few seconds rant. Dr. Pelumi, are you still there? Okay, network has... Anyway, let's take a break, because my director just said gone now, so she's off air. So let's take a break and see if we can try to reconnect her within the next 5 minutes. Do we still have up to 5 minutes left? Left actually. Let's see if we can reconnect her, because I don't even know what to say again now. Let's take a break. We'll be right back. All right, Dr. Pelumi is here with me again. Dr. Pelumi, please, can you just end in 30 seconds because we're having network issues and we've got to go now. Please just coalesce your thoughts in 30 seconds if you can, quickly. Can you hear me? Oh, okay. She can't still hear me. Okay, so I guess we'll just wrap it up at this point, but I think that the core of what we've been saying from the beginning of this interview is that policies by governments, both states, local, as well as federal government, should be felt by Nigerians. It's also unfortunate we pay for some of these services, we do not get, commensurate satisfaction from the services that we pay for. In fact, during the break, I was being told that, Nancy, you've not been around now, that this network thing has been on for days and for more than a week now. So this is my welcome to Nigeria. Yesterday, I got a rude shock. Everything was like almost scattering, yet we pay for service charge across board. So I think we should just do better in the country. That's the much we can take on today's edition of the program. Thank you all for joining us. Join us again tomorrow. Same time, I'll be here, God willing. I am Nancy Naji. Be the best you can be. And be that change that you want to see. Government should also be the change that they want us to see. I'll see you all again tomorrow. Bye for now. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.